Hello, and welcome to the 5th episode of The Business of the Starving Artist with Hayden Woods, where our mission is to get you from being a starving artist to at least being a surviving artist. This episode is going to have a couple extra disclaimers. The first one is our obvious one of a lot of the work that I do is as a musician and music educator. Therefore, a lot of my experience will be geared more towards those wanting to start that kind of a business, but a lot of the lessons that we can take do apply to other creative areas and just self-employment in general. As this is a episode about financial things, the additional financial disclaimer is that I am not a tax person. I am not a financial person. I am one random guy trying to figure out an online forum. Everything that I say or have done is my own experience. I have done my due diligence, and you must do your own due diligence as well. I will give kind of my thoughts on ideas, but they are not like the spoken true and final word. This is just my either interpretation or my experience with that. With that said, today's episode is Cashes, Taxes, and Expenses. Oh my. We have to think about a lot of things as creatives. Again, we've talked kind of towards the beginning about how you need to get started to get that cash inflow. So basically making your income. Now with that, and because you're your own business, you have to keep track of any and all money that is coming in. For my business, what I do is I accept a couple different ways to pay. The first one obviously being cash and check, making sure that it's made out to me, although I've been able to get, if it says my name plus music, it seems to be just fine because my name is still on it. But I try to encourage the families, if they're writing checks, just the name is all I need. Another way that I've adapted to the changing and more modern era is to get a online or like a payment app, like a PayPal or a Venmo. There are a lot of different ones out there that you can do, and it's mostly just dependent on what families are comfortable with. What I've noticed is that a lot of families like having the online option because then they don't either have to waste a check for one lesson or a month of lessons, or they don't have to worry about pulling out cash. It's just boom, there you go. And then I can turn around and, okay, put it in my bank. I just got their Venmo debit card so that I had even quicker access to that money. Say, because I'm recording on a Friday right now, if I tried to transfer that money over, my bank is small enough where I can't do the instant transfer. I have to wait a couple of business days. Usually it's at least one business day before it shows up as pending, but because it's on a Friday, that means I have to wait all weekend to get that money to show up in the account. And there have been a couple instances where I've needed that money a little bit sooner. So I opted to get that debit card so that I could withdraw or use my money from Venmo even more readily. The nice thing about the online payment forms is that it does a lot better at tracking how much you're bringing in, because with cash or even check at times, unless you're recording it somewhere or you're very diligent about keeping up with your bank statements and being able to know what money came from where, it's very hard to make sure nothing falls through the cracks. And I mean, when I've gone through and I've looked at past receipts, I've usually found one or two missing payments by check in my bank statements that I maybe didn't record in my current log. I use just one of those basic daily, weekly planner things to kind of write down like, okay, this is the client, this is how much they paid, this is how they paid it, and it's backed up by my bank statements. Or like for Venmo, it's already there. Now, the thing about the online payment system is that if you're running it as a business, there's always the chance, and this is something that usually happens, is that when you're giving a product or a service and using online payments as a way to do that, they're going to want a payment processing fee. So, like Venmo, if you mark it as a service, I think there's like a percentage and then a set amount. Um, so you are gonna, if you have it marked as a service or a product, you're losing a small fraction of your income. But there's a workaround to that we can take advantage of. Um, but just make sure you're keeping track of all of that, because once you've figured out how much you're bringing in, you can figure out a number of things. You can figure out where that money needs to go as far as your expenses. Um, but more so, you kind of have to figure out this lovely world of taxes and how we have to navigate it as self employed individuals, treating it as a business income. Somewhere around here, I've got a book that I've been looking into just to kind of check on anything. Again, I'm pretty sure they say it in here too, but that you still, even if you get this book, need to talk to like a financial person, or do your own due diligence. But I use the 475 tax deductions for businesses and self-employed individuals. And it goes over, again, so many different deductions that you can take as a small business or as a self-employed individual that you normally wouldn't take as just a regular 9 to 5 job, or what we call them, W-2 employees, versus us being more 1099, depending on what kind of work you're doing. So, and this book is on its 13th edition, so obviously there's been some changes made, good or otherwise. There's a lot of disclaimers riddled throughout the book on how sometimes it's hard to determine what actually works versus what doesn't. So this is why I say you should, at the very least, think about whether you need to have like an online thing do it for help you with it, like TurboTax or just the free tax, whatever, or do you hire an accountant to help you with this? And obviously, if you have an accountant, they can kind of do the same thing of walk you through everything that you're doing and tell you what works and what doesn't for your business. If you're doing it yourself, having something online like online tax service at least helps cover yourself just in case you do mess something up. They can either flag any expenses that either probably don't actually count, or maybe there's something where it's like, this is a little bit too high. And I'll talk about my office space portion of that in a moment. But there's all these different things that we have to think about. And if we need to, or if we're intimidated by the financial side, it would almost be better to just have somebody else do your taxes for you. Now, I myself do them myself. I don't have anyone else look over them at the moment. As the business grows and as I'm considering whether to hire another teacher to kind of help with the inflow of students, it might be good to have a CPA to kind of go over, okay, here's some of the new things you're going to have to think about when you're going through there. The reason you have to stay on top of all this, especially as a self-employed individual, because this is how you figure out, okay, how much do I need to pay for like Social Security and Medicare and basically the self-employment tax, so that it shows that you're making an income for when you eventually retire. Now, I don't have any plans on retiring basically until my face stops working, because I would like to keep being a musician for as long as possible. Obviously, as you get older, you start finding some other things, like as a guitarist or as a trombone player, there's a lot of hand movements that maybe over time I'm going to have to start thinking about, okay, do I need to address any medical sides to that? Well, we'll see. But it would at least be good to have some kind of a backup, or at least some kind of plan for that point when we retire. I'm currently in the midst of switching from kind of doing my own thing with investing and saving for retirement and moving it over to an investment firm just because, one, this year has been very, very rough on the market, and B, I would like to just know that someone else who's got a handle on it is going to take over a lot of that. Now, I'm keeping a couple of things in my own investments because they're at a point where they can kind of build on themselves, whether it's like a real estate investment trust that pays out every month or a telecommunications stock that pays out a decent dividend quarterly, and it can build upon itself too at the current price that it's at, of course. Um, but those are things that I decided. And again, if you're looking to do anything like this, you have to do your own research and you have to figure out what it is that you want to do with all of this. So, on the tax side, let's figure out, is it better for you to do it yourself versus someone else doing it for you? And if you're usually on your own and you don't have too many like scattered expenses, you can usually get away with doing it yourself. It's nice and easy. Um, if I had a lot more time, because this is a topic that may just kind of keep repeating itself, we'll be going over kind of a crash course in expenses right now. But as time goes on, we can look at some more in-depth research into some of the various different things that you can do. On my list, I've got a few common things that count as expenses that you can report or not. We'll get to that in a second. The first one being, and probably the main thing about a business, being the office space, like where you do a good chunk of your, I would call it your administrative business, because for me, I travel to each lesson, but this office I'm in is in my house, and this is where I do all of my financial related, or in admin, I guess, related tasks. So bookkeeping, scheduling, and the like, and research for current and future students, stuff like that. So I take, for a home office, you can take a home office deduction for a portion depending on like square footage, and there's other things that come with it, like I can write off a portion of my internet, my electricity. I mean, I don't really use the or write off the trash part because that's quarterly, and it's like, maybe I think it saves me like $2 at the most. Again, different for every individual. The second thing that I wrote down is travel. Again, because I drive everywhere to every single lesson, I keep a log of all the mileage that I'm driving. And there's two ways that you can take a travel tax deduction, whether it's the standard mileage rate, and actually I'm going to go do that right now, 2023 mileage rate. So for 2023, the per mile rate, the standard rate, is 65.5 cents per mile. So for every mile that I drive, I can take 65.5 cents as a tax deduction. Unlike many years before, there was a point where they had to cut it in the middle. So like the first half was one rate and the second half was a slightly higher rate because of the high cost of gas. So I can see how many miles I'm driving. So if I take as an example, again, this is an example because I have 2.5 more months of 2023 to go through. But let's say that the amount of mileage that I drove for my business is $3,000, or 3,000 miles. There we go. So if I multiply that by 65.5 cents, I can take $1,965 worth of driving off of my income at tax time. So that's a pretty sizable chunk of change to either reduce your tax bill or get closer to, if you end up with a small refund through other avenues. Um, it just kind of helps keep that going. So you can either take it through that way, or you kind of figure out, okay, I use this vehicle this much percentage of the time. It kind of means you still have to track either way, but you can use an actualized method, which is saving all of your receipts for gas, oil changes, car repairs, the insurance that you pay on every month, and then figure out total mileage and business mileage, and then figure out the percentage in order to figure out how much you're going to take there. Now, it depends on which way you decide to take this mileage, whether you can kind of go back and forth. I like the simplicity of the 65.5 cents per mile. And typically, I don't have a problem with spending on repairs or oil changes. So for me, it makes more sense to do this. But if I had a giant repair, or if I say my vehicle got to the point where I needed to get a newer one, I'm not looking to get into a brand new vehicle anytime soon with how high everything is. I would need to consider, okay, is that going to cost, or is that going to be a bigger deduction compared to the mileage? Especially, do I pay for that with cash or do I finance it? And then you have to figure out all that stuff. So again, we could go on and on about this, but I want to keep moving through. The next topic that I have, or to think about, are supplies and equipment. And for musicians, it's more equipment based, like instruments, music, recording equipment galore. But for our physical media individuals, again, painting, photography, sculpting, what have you, you have to consider all of the supplies that you use to make these works of art as your supply expense. So if you buy a nice new set of paint brushes, for those who do that, you can take that as a deduction. If you're buying wood or marble for sculpting, you can take those as a deduction. Outside of that, again, for like film and photography, maybe you also consider, if you're renting out a studio space for displaying your works or creating your works, that would be the office space. But for displaying your works, maybe there's like a studio rental. You would be able to potentially take that. Again, all of this is just kind of based on what experience I have. It's not for everyone. Now that I'm thinking about it, I'm probably just going to slap a nice giant disclaimer throughout the episode that just kind of keeps popping in and out, or maybe it'll just kind of stay up the entire time. Please do your due diligence. Another thing to consider is, obviously, when you're self-employed, you're kind of in charge of a lot of the things that normally an employer would take care of. So we talked about taxes, but another aspects, or a couple aspects, could be your retirement, could be your insurances, like health insurance. Now, when I started out this business, because of the much lower income that I was taking, I was able to get on my state's Medicaid program. But as of the beginning of October of this year, I now make more than the bottom line that's given in order to qualify for that. So now I have to pay for my own. And you can kind of see it here that I pay about $37 a month for insurance, for medical and for dental. I lost my vision insurance, so I'm going to have to figure something else out for that. Either way, you can take that as a health and wellness sort of deduction, because you're now in charge of having to pay for those insurance premiums or any of those medical expenses out of pocket. For the retirement side, usually we would have it where if an employer is contributing to that, it's usually on a matched program, like 2%, 3%, depends on your employer. As a self-employed person, you don't really have that advantage. And again, I'm moving from investing on my own through like an E-Trade and moving over to a new I'm moving a good portion of my money. I'm keeping some in my initial account, but I'm moving a majority of it over to an investment firm that can help structure it in a way that allows for like the Roth IRA so that I can start planning my retirement. Again, I don't plan on it, but I at least want something set up so that down the road, when I either start seeing that I need to cut back on my work, or maybe there's a point where I would make way more on the retirement that I don't need to work, I can start taking that instead. But if you're in charge of that, you kind of have to figure out what you're going to do. Now, there are things like, again, we talked about the Roth IRA. That's kind of like a lower income one. But if I go to like a SEP retirement plan, this is specifically a simplified employee pension, but there's also like small businesses and self-employed SEPs that work to kind of help with meeting those retirement needs. And you can often contribute more because, again, you're the employer and the employee. So you kind of have to hit both sides of that. Something that I forgot to mention, and this will actually kind of work out on here, is the self-employment tax rate. Now, right now, I'm going to move it over here. There we go. The self-employment tax rate, the tax that you should be paying as a self-employed individual on your income, is about 15.3%. If you were a, again, if you were just a regular employee, it would be split in half because you'd be paying half of the Social Security, Medicaid, or Medicare tax rather, but the employer would be in charge of the other half of that. But if you're self-employed, you have to basically pay your portion twice, or the full 15.3. The nice thing about that is the employer part of your self-employment tax rate, you would be able to take that as a deduction. So it kind of balances itself out a little bit more. Again, you do have to do your due diligence because you kind of have to figure out how much you're going to end up paying, whether it's all at once at tax time or if you can quarterly pay in kind of anticipation on what you expect to make. So this is another thing where I'm having to probably start figuring out, how do I deal with this? How do I budget for something like this? And perhaps that's just kind of part of the next phase in the success, getting out of like the starving or the surviving phase. Because when you're surviving, you're trying to keep as much money in as you can. At least that was my mentality. So I decided I would take as many of these tax deductions as possible. However, there are some things to consider. The biggest one for me right now is, over time, it would be nice to actually get into a house, like buying a house. Now, I'm not anticipating being able to afford anything in my current area of Bozeman, Montana, because the housing market is ridiculous, and now trying to get an affordable house is essentially impossible. So we have to consider, either do we wait till it crashes, or once the girlfriend graduates, do we find a job that she can go to where it's more affordable and she can make a good living, and then I can go and build the business over again, knowing what I know, and try to buy a house there. When you are a self-employed person and you're trying to apply for a mortgage, what they're going to do, they're just going to do this, so you have to be ready for it. They're going to take your last 2 years of your 1040s, of your taxes, and they're going to extrapolate the net income, not the gross income, the net income, obviously less. and they'll average it out, and they'll anticipate that's what you would make every year. And that's what determines how much you can qualify for. Now, again, I take a deduction on my rent and my utilities. So part of what I pay for this house, the electricity, the internet, is deducted from my taxes. If you can see where I'm going with this, it's that the reality should be that they take your gross income, the amount you're making, to work on that if you're using part of your income to pay for your business side of your office. Especially if you're in a home office. That I don't want to go on a huge tangent or a big rant, but basically something needs to change to make it a little bit easier for self-employed people to go, okay, here's how much I make before my expenses, and here's especially the part where I'm spending on my home office. If you're working from home like I am, include that in how much you can afford for a home. Because then maybe we'd see a little bit more success for a lot of these individuals. Or we can just wait for the crash. Either way, tangent over. So that all of that to say, you kind of have to pick and choose whether or not you want to take a certain amount of deductions. For me, I think my next year, I've taken a tax harvesting loss that I'm going to use, but I'm probably going to have to pay some taxes this year for the benefit of trying to show that I'm making more so that I can get into a house. Because you can only take, obviously you can take the maximum amount of deductions, but that reduces your income greatly, at least of what you're showing on your taxes, because you're using that money for your business. I guess another thing to consider, and this is something that happened with my sister, because we were doing taxes, I was helping her figure that out to kind of see, I was like, okay, you're self-employed, here's the deductions I take, here's what you can take. Hers kind of worked a little differently because she has dependents. If you have dependents, it's usually a lot easier to get money back for the child for having kids. That's not a primary reason to have kids, mind you, although I bet some people think it is. But what ended up happening is when we tried to take those deductions, her rebate, her tax refund actually started going down for it. I was like, okay, perhaps for you in your situation, maybe you don't take the deductions, because if you have a dependent, that kind of takes care of a lot of it. And again, that's just one person. That's not a set in stone thing. It would be interesting to look into it and see how many other people do self-employment and how many of those people do have kids, and see what their tax situation looks like. So you have to kind of pick and choose your battles, and especially make it so that you're showing that your business is growing, because I mean, there is a point where if it looks like you're losing money every single year, that kind of makes it hard for them to believe or know that you're really trying to make your business work. Again, my first year was really hard, and I basically took all of that income as a loss because I spent way more money trying to get the business off the ground. But then the next year, I was able to show a little bit of profit, but I was also working another job, which is its own thing. So that took care of a good amount of the taxes. Now I'm at the point where this is my job. There is no second job. So this is the point where I have to be on top of all of the tax financial side. And again, if this is something that intimidates you, this would be the point where you should go talk to someone Don't sign up with anyone yet, but talk to them through that and do your research to make sure that you're getting the best value out of it. Also, you can take either the CPA fee or the Turbo, like I use TurboTax, you take that fee, especially for self-employed individuals, and write it off the next year. This game of finances is a long game. And as such, we've only kind of given the very crash course of cash's taxes and expenses. Therefore, there will probably be a myriad of episodes to go over all of these different things. And my call to action on this would be, what aspect of it should we dive way more into? And those could become future episodes in a heartbeat. There might be some time where we go over, okay, this is how we calculate an office expense. This is how we figure out what actually constitutes it. Maybe we go through that book a little bit that I showed. There we go. And see some of the things that maybe there were things that I didn't think about. There might be some things you don't think about. We can go through and see what we can find that would help maximize the benefits that we would have for this. With all of that said, for the final time, big disclaimer, I am one person running my own business. I am not here to tell you exactly what to do with your money by any means. The only suggestions that I make are, if you would help me out, I have a tip jar displayed. That helps out a lot. Otherwise, just take everything that I said and go talk to a professional. Get their insights on it. Because again, every business, every person is different. With that being said, thank you for listening to episode 5 of Business of the Starving Artist with Venmo Woods. Tip jar is at the bottom. Otherwise, just kind of sharing it around and keeping the discussion going is plenty of help enough. Thank you so much for listening, and until next time.